Hello and welcome to the Elliott wave analysis on gold. Now, first we're gonna have a walkthrough from the beginning of 2016 until now. So let's see how the wave structures unfolded so far. So we have here basically from December, gold actually started a bullish cycle. So we have basically the first wave up here, which unfolded as a five-way structure, one, two, three, four, five, and that's this five-wave structure. Then we have the bearish divergence right here, which I'm gonna mark right now. Let's change the color. All right, there we go. So there we go. What happened here basically at the end of the fifth wave? Um, bulls they basically ran out of steam, and um, that's what happened, right? They ran out of steam. So basically, price action move created a high point, then retraced on the fourth wave, and on the fifth wave created a new high point. But then again, bulls didn't have enough steam, enough power, so they didn't move enough liquidity in the market to justify this movement. Therefore, the second corrective wave, which ended right here, unfolded as a irregular corrective structure, A, B, which actually formed a false breakout. So it moved higher than the previous high point, but anyway, this is the B wave. So in some cases, this is normal, not to be alarmed or some things. Right, so we have basically A, B, C on the second corrective wave, and then again the third bullish wave has started, ended here. Same story like the first wave, the bearish divergence appeared on the fifth wave. This is an excellent way to trade the retracements. So basically, at the end of the third wave, which was formed out of five waves as well, one, two, three, four, and then five. Of course, the corrective the correctives started. So we're going to zoom in now, and basically here we have a contracting triangle, and these levels were very significant. The 1310 levels were very important. So what we can actually see is both the 1310 and 1370 levels were in fact was the range, the trading range until this breakout. So basically what happened here, we have a contracting triangle, gains support, the fourth wave basically gained support here, fifth wave started, creating a new high point, then again it started unfolding on the downside on the corrective side. So after the third primary wave, then we have the corrective structure. This corrective structure within this wave 4 has basically unfolded as a very complex triple three structure. So we have basically a wave W formed out of five moves, one, two, three, four, five, and then after it finished, the bullish divergence appeared right here. On multiple cases, I actually followed up with everybody, so you had this trading signal from my side, also this one as well. Now, what we can see here is basically after the wave W unfolded, then we have wave X, right? A wave X was formed out of a complex structure A, B, C, D, E, which we can see A, B, C, D, E right here. So this is when X finished. But within this within this B wave, we have another basically a contracting triangle within a triangle within a complex structure. So a complex structure within a complex structure. So basically we have A, B, C, W, which unfolded as a zigzag, and then as a complex structure again A, B, C, D, E, which confirm the X, and then five-way structure one, two, three, four, five, which confirmed wave Y, and then a bullish divergence again, starting wave C here from the five moves, and then wave D right here and wave E completing X. Now, in real time, what's happening right now, because basically this is what we're here today for, wave Y has basically broke through the this channel line, this trend line. Okay, so if I zoom out, you guys are gonna see the trend lines right here where it gains support, and now this trend line was broken. All right, so it entered another channel. So this blue channel and then this purple channel. So we're gonna zoom in here. All right. So what we have so far is wave 1 and then 2 retracement, and then wave 3 unfolded as a extended one. So basically the extended wave. So basically we have wave 3 right here, down here, and then the corrective has started. So we have A, then B. Using the Fibonacci expansion tool right here, we have basically a target for the wave C, which will also end wave number 4. Okay, so in other words, once this 38.2 retracement from this Fibonacci measuring the third wave will be touched, or 100%, or even 161.8 percent or 50% on the fibs here, mathematical measurements, then we should expect, if not right now, because nothing is nailing the wall. We have here multiple times price try to breach these levels, and it's basically unfolding on the bearish side. So in other words, this might be finished or it might continue. But what we do know is that we have the upcoming fifth wave right here. Okay, so we're gonna mark it here, which will confirm wave the Y. Sorry. Okay, so once this will happen, this will be the point of interest for a buy position. This is where you want to buy on the trend line here for the channel. Also, you would expect a bullish divergence right here. So basically, this is the bullish divergence that we're waiting for. In other words, short term, gold is a strong sell. Long term, gold will be a buy at these levels. You wanna be very careful here, very selective about the levels. What I can say is that good levels will be 1230 and 1210. So 1230 will be at the 150 Fibonacci expansion tools by measuring these waves from basically from W to X. All right. So by that we can determine how long wave Y can go. So once we have that bullish divergence, then we're going to have a buy, and then of course a strong buy on gold following the elections in the United States as well. So technically speaking, we're going short for the we're selling for the short term, but long term we're basically looking to buy gold, possibly for the first half of 2017 even. So the trend will most likely continue, just like this overall trend has started right here. This is what we would expect. The reason why I'm saying this is it's because wave 1 was an extended one. Wave 2 was a mere correction of wave 1. And wave 3 was somewhat limited. In my opinion, it's not big enough. So we should expect wave 5 to have a lot of power once it starts. So in other words, we're basically shooting for the downside and then buying it at those levels 1230, 1210. So the basically this is the point of interest and the sell zone. All right, let me just zoom in so you guys can see. All right, so we have entry points levels for sell positions 1270 and 1285. So basically 1270 at the 100% Fibonacci extensions by calculating how much higher can wave C go to complete wave 4, but possibly 161.8, which will be 1285 right here. This is basically the zone where you want to sell. So you have two options right here. Either you sell it until the buy zone and you take advantage of this, or you want to be conservative and you want to shoot for a long trade at 1230 and 1210. We're gonna follow up on this analysis, of course. Be sure to subscribe, and if you do like it, we will very much appreciate your feedback. Write us or book your sessions there. I'm sure that you will get a detailed PDF. So that's it for now. This was Richard. Stay in the green and many pips ahead.